Gold prices are falling on Tuesday morning as it looks like the Syria conflict may not be much of a military conflict. And here to talk about it is Tom Vitiello. Tom, thanks for being with us. What are you seeing this morning?
Well, we're seeing the report coming out last night that there could be a deal in terms of the chemical weapons, and that took the pressure out of for the upside of gold. And safe haven demand diminishes, and they piled into equities in the last 2 days. So typical news-driven market that we've seen.
Yeah, so we're finally back in September, probably going to see some volume pop up. We did see gold jump a couple weeks ago when we thought there might be some sort of U.S.-led airstrike. Is this finally people saying we're going to price it back out?
I think that was just a short covering rally. I think there was a lot of shorts in the market, and it was thinly traded. August, a lot of people were on vacation, so it pushed the market higher. But when we got above 1,400, the physical demand did wane out of India and China. There was a report out today, actually, that India's importing of gold last month of August was a third of it was in July. So that's what we saw as the markets rallied. People put their hands in their pockets and the market came off again. If it goes down another $50, maybe you'll see the physical demand return again.
So do you think, speaking of going down and the return of possible physical demand, how far can it go? What kind of level are you looking at?
Well, there's a couple of big levels. The 1350 level is where we broke out from. We got above that, and it hasn't really seen that price again. We got all the way up to 1434. Now it's starting to retreat. If we break that level, we start to get in the low 13s, maybe 1305. 1287. There's a lot of numbers, obviously, and then maybe they take a crack at that low, which is 1187. But again, if we can get above the level of 1480, then maybe the low is in place. But this is the question. This range is in place now. We have to break on either side of it.
So do you as a trader start focusing past Syria and into Federal Reserve minutes coming up later this month?
Well, I think it depends on your time frame. I think this tapering is a news event, and in terms of them tapering the taper and how that affects gold. But I think really the question is real interest rates and inflation, and those are the things that really drive gold fundamentally for the long term. Whether they taper or not, they can taper and we can have inflation, and that would affect gold. So I think people are focusing on the Fed a lot, but I think it's really the consequences of the Fed's actions that are more important for the long term.
All right, well, as always, it's good to get your take, Tom. You heard it from Tom. Right now he is looking at lower levels. Keep an eye on Syria. Maybe we're not quite ready for the Fed talk. For the Street at the NYMEX, I'm Joe Doe.